Jay Powell, interesting time to be making pronouncements, isn't it? Jim Wilcox is a former economist for the Federal Reserve. He's now Professor of Finance at the Haas School of Business at the University of California, Berkeley. And Ed Stringham is President of the American Institute for Economic Research and Economics Professor at Trinity College in Hartford, Connecticut. Gents, thank you both very much indeed for joining us. I want to start with you, if I can, Jim. I mean, Jay Powell could hardly do anything other than leave the interest rates alone at a time like this, could he?
Yes, there's really not very much more that the Federal Reserve can do. They've tried to pull out all the stops. They've been very generous to the financial markets, and the markets have responded positively. But he doesn't have a lot more bullets to fire at this point. And so he has been pleading for the administration to enact some kind of a relief and stimulus program.
Ed, the position at the moment from the market's point of view is pretty calm, in fact quite chirpy. But if this transition were to go on a while, let's say, and we don't have anything other than a bit of treading water, they're going to start getting a bit jittery, aren't they?
Sure, yeah. So the Chicago Board of Exchange Volatility Index, the VIX index, has been falling this week. So I think that indicates that investors are seeing less potential problems ahead. Obviously, the stock prices have gone up. And I think, David, you hit the nail on the head in your introduction that the investors, corporations are harmed by tariffs, trade wars. So that's a potential improvement by maybe the new president coming in. On the other hand, markets have been worrying about financial regulation and increased taxes of the potential new president. That would be negative for markets. But I do think the potential for the divided Congress, for gridlock, in some weird sense, maybe that's the best that markets can hope for, that maybe the ability to increase taxes, increase regulations are not going to be there, and maybe just have a little bit more free trade. So in terms of market prices, I think investors are taking it a little bit optimistically.
Jim, I wondered, do you share that view? This is the best of all possible worlds if the Republicans hold on to the Senate?
Well, I don't know about it being the best of all possible worlds, but there is some virtue in having divided government. One thing that is likely to happen is that one way or another, we will get a stimulus package. In the unlikely event that President Trump is reelected, I think you'll get a stimulus package enacted very soon, probably before Christmas even. In the more likely scenario,
that's almost not an option, is it, that it's done before Christmas? I mean, that's another, what, 6-8 weeks away?
Yep. That's right. But negotiations have been going on for a long time. And if you really ended up with a reelected president, he would be a lot more influential on his Republican senators to actually get an agreement with the Democrats. Much more likely, of course, is that President Biden takes office in January and we don't get a stimulus or relief package until then. And at that point, it may well be not quite as consumer-friendly with a divided Congress as you might otherwise get.
No, maybe not as consumer-friendly, but Ed Stringham, your view presumably is if it is less of a stimulus package than the Democrats might have wanted initially, that might not be a bad thing.
Yeah, certainly. So the amount of money that the government has been spending, the amount of deficits and debt, that's going to be coming from taxpayers, whether that's individual laborers or American corporations, foreign corporations. That has to be paid for somehow. The debt burden is going up. And the idea that we can spend ourselves into prosperity, just tax and spend, and tax and spend. And in these cases, actually, they haven't been increasing taxes. But the fact that we're spending money with reckless abandon, I just don't think that's a foreseeable, sustainable future. So certainly, I think that the fact that maybe nothing gets done, I wouldn't, to use your term, David, I wouldn't say everything is the best of all possible worlds, but it's better than maybe the alternative.
Yeah, no, it's a bit of a Pongloss sort of statement, isn't it? In if this is the best of all possible worlds, which perhaps it clearly isn't. I just wondered, Jim, reckless abandon is the phrase that Ed uses there with regard to some of the Democrats' desires to spend. How would you define it?
Well, remember, there's a crucial distinction between the health of the stock market and the health of the economy. Some things are really good for the rest of the economy, and they may or may not be so good for stock prices. This is an economy that desperately is going to need more relief. The stimulus and the relief packages are like coffee. They provide stimulus for a short time, but unless we get the stimulus cup replenished, we're going to have a very cold, unpleasant economy for the next 6 months or so.
Right.
The household sector, the small business sector, state and local governments are running out of their very small reserves. And so what we do need is, in fact, for the federal government to borrow a lot more and to spend and provide a lot more so that the rest of us can spend more.
Yeah, well, coffee, as you say, it is just a stimulus in some respects. So, I mean, Ed, is the time approaching where you're going to have to look at, I say you, government, at easing the tensions in the big problems, perhaps on the global level, the US-China trade issues? I'm not pretending it's going to turn around and suddenly be all sweetness and light, but there is room for manoeuvre there and it needs to be taken.
Oh, sure. Yeah, I think this is probably one reason, again, to be a little bit more optimistic. I think the trade wars and these varying tariffs, they're unpredictable over the last few years, have been very destabilizing towards supply chains, the various sectors, and corporations don't like it. Tariffs are basically taxes on American corporations or even foreign corporations, American consumers, foreign consumers as well. And the idea that these things might diminish, I think, is actually tremendously positive. So I think that the previous or the existing president, his deregulation and tax cuts, I think those are clearly good for markets and the economy. But some of this irregular trade wars and destabilization of the economy, I think if that gets diminished, that would be a really good thing for markets moving forward.
In 20 seconds, Jim, I mean, Joe Biden hasn't been afraid to speak quite tough about China. You would expect movement there, though?
Oh, yes, I think there will be movement. You can be tough, but you can also be sensible. I think Biden comes from the wing of the Democratic Party that thinks that free trade is to a very large extent a benefit to most businesses and households in both countries. And I think there will be, as was just suggested, some easing up of those kinds of tensions and barriers to trade. But you can still be tough about enforcing unfairness in some of these markets. And I think it is pretty widely recognized that China has not always been playing fair in the economic game.
Very briefly, sorry, Jim, are you worried about a hiatus in business, in political business activity between now and January?
Well, I am more worried about the business actually slowing down. Yes, our job market has actually softened up a bit. We will see a jobs report tomorrow, which will seem so-so. But in fact, the outlook is not particularly rosy. And in fact, we can see pretty clearly that a lot of businesses are going to need a lot more help, and so will their consumers.
OK, Jim Wilcox and Ed Stringham, thank you both very much indeed. Great to get your expert views on the issues of the moment, and let's see how that election pans out. But good to see you both. Thank you.